everyone. Welcome to Robert Cowan Investments' third webinar in our Generational Wealth Training webinar series. Today, our webinar is on investing like a millennial and will be run by Eric Lapperman. Eric has been at Robert Cowan Investments for just over 10 years now, and he has worked under Alan McConaughey for many of those years. His focus is on exciting growth opportunities, which you will see in the webinar to follow. If you have any questions or queries, or you'd like to contact Eric about any investment opportunities in the future, his details as well as his PA Marika's details will be on the last slide of this presentation. So let's get going, and I'd like to introduce you to Eric. Over to you.
Thanks so much, Kate, and good morning, everybody. It's a pleasure to be here today, and thank you very much for joining us on this third webinar of our series of generational wealth training. I know we've gone through two that have been a little bit more on the tax side of things, and as important as it is, perhaps maybe not necessarily that as exciting. So we've decided that what better way than to do our third webinar about the millennial generation themselves, seeing as we're talking about generational wealth training. So today we're going to have a little bit more of an exciting one, a little bit more of an interesting one, and I hope that we can walk away from this with perhaps a little bit more insight into millennials as a generation and why they're so important to ourselves as investors. So I think without any further ado, let's kick it off. Starting with, who millennials are, and the definition does vary relatively slightly from source to source, but for the most part, we're looking at individuals who were born between 1981 and 1995. So that would basically make them in today's time, anywhere between the ages of sort of 26 and 40 years old. So the median age for a millennial would be about 33. So pretty much exactly as old as I am, and basically smack bang between Generation X and Generation Z, hence why they are otherwise known as Generation Y. So do they matter? Yes, they absolutely do matter. That's why this webinar exists. They're incredibly important to marketers and hence to us as investors. So today, my job is to present to you an interesting view on how to understand them, their beliefs, their character, personality traits, and more importantly, how we're able to use all of this information to better inform our investment decisions for our portfolios. So why do they matter so much? Well, first of all, they're the largest generational cohort in history. So today's population is roughly around 7.9 billion people, of which 2.3 billion, which is roughly about 30%, are millennials, right? So those are individuals between the ages of 26 and 40 years old. So it's quite a substantial portion of today's population. But more importantly, by the year 2025, millennials would have surpassed, in terms of numbers, both baby boomers and Gen Xers combined. So a substantial portion of the world's population, sort of edging on close to 40%. Right. Now, in terms of our offshore investments, we focus predominantly on the US, products and services marketed to consumers in the US. So just to give you some context, millennials in the US account for about 80 million people, right, in a population of 330 million. So again, close to 25 to 30% of the US population is really made up of millennials. Now, perhaps more importantly than just the sheer number of millennials in the population, the fact that they're also the largest contingent of the workforce. So in the US, you're looking at about 150 million people currently employed, right, of which 56 million are millennials. So 56 million are really between the ages of 25 and 40. So that's 35% of the US workforce consists of millennials. And interestingly enough, by the year 2025, that's really only expected to increase. So by the year 2025, that 56 million cohort would have grown to around about 74 million people in the US, which is 40% of the working population, right? Really important. Why? Because, well, at the end of the day, the more they work, the more they earn. So their income is really expected to start to increase. If you look at this chart, they've just very recently surpassed baby boomers in terms of total global projected income. at about, just call it about $26 trillion worth of income. And by the year 2025, that's expected to increase even further. And the projected global income for millennials is going to be in the region of 35 trillion US dollars. And that's a lot of money, and obviously important to us because the more income that they have, obviously the more they're able to spend on products and services. In addition to the fact that they're able to generate more income as they work, I think more importantly, and perhaps the main reason why this webinar was set up, is because they're actually expected to inherit a ton of wealth. So this chart is the generational wealth gap in the US. So basically this chart depicts the distribution of household wealth in America. Now, total household wealth in America sits at about $150 trillion. And you can see from the light blue line there that baby boomers really still account for the lion's share of household wealth in the US. And slowly but surely, you're starting to see a nice little increase in Gen Xers and millennials as they start to accumulate wealth. But I think the important point to take away from this slide for context purposes is that of the total US household wealth in America, millennials only really account for 5%. And this is the main reason why we started these webinars, is that there is a ton of wealth that is really going to transfer through the generations down to millennials and Gen Zs relatively soon. And obviously that is going to impact some of our investment decisions. The other important thing why they matter so much is their debt to income ratio is relatively high. The average debt to income ratio by millennials sits anywhere between sort of 36% and 38%, a lot higher than any other generational cohort. I think more importantly, and not shown on this slide, but that debt to income ratio has really only started to increase over the last 5 years, albeit quite substantially, and perhaps, a function of lower interest rates and a lot of stimulus out of America, etc. But the reality of the matter is, for whatever reason, the point is that they are able to take on credit risk. They do have appetite for credit, and in doing so, are able to spend on goods and services in the economy. So, on average, about 3/4 of millennials have some form of debt, and really most of that debt in America actually sits in the form of student loans. So we'll talk about how that plays into our investment decision making. The other important reason, and we've got a few slides on this, is that they dominate social media networks. Some research shows that on average, millennials spend 2.5 hours a day on social media. That's not the internet. That's not other forms of activity. That is just purely social media. 2.5 hours a day is what they spend on social media. And if you look at this chart and you look at the share of social media users by age and gender, you can see the age group between 25 and 34 really accounts for the lion's share of social media users, and that really is obviously millennials. So interestingly enough, even ahead of Gen Zs, albeit the fact that maybe Gen Zs spend more time on social media, they don't necessarily account for the lion's share of users, and that's why millennials are so important. So what social media platform networks are the most popular? Well, across the world, it shouldn't come as any surprise that Facebook sort of tops the list with 2.7 billion users, right? Followed closely by YouTube and WhatsApp with both over 2 billion users. And then obviously a host of other social platforms that some of us may have heard of, some of us wouldn't have heard of. But the point here is that there are a ton of users across the social platforms or social networks. And that really, as a company, if you don't have a presence on any of these platforms, then you're really missing out on a huge opportunity to market to one of the biggest generational cohorts in the world. So more importantly, as much as we know which are the big social media networks, the social media platforms, we want to know which ones do the millennials use the most specifically. So we look at the penetration rates of social media platforms amongst millennial internet users. And you can see there that topping the charts is YouTube with about almost close to 100% penetration rate amongst millennials. And then obviously followed closely by Facebook and Instagram with almost 3/4 penetration and 2/3 penetration, as well as a bunch of other social platforms such as Snapchat, Twitter, and some more. So, I think what's important here is the penetration rates are particularly high. Interestingly enough, as much as Gen Zs also use these social networks, the reasons for using these social networks differs between the generations. And what we've found is that for millennials, the main purpose of these social networks is really to communicate with friends and family, to learn about trends, and to get news. So what is important here is that the millennials are driving a remarkable pace of technological change across the world. The user adoption rates across a lot of these platforms is skyrocketing. And in doing so, these platforms are scaling quicker and quicker, getting more and more users. And obviously, the more and more users they have, the bigger and the faster these businesses grow. So this chart over here basically just gives us an indication over the years of how long it took various services and apps to reach 50 million users. And you can see way back in the day, when credit cards first started and televisions first started, it took multiple decades to reach 50 million users. Whereas, in more modern times, you're starting to see digital services being adopted by millennials at a much quicker rate than before. You're talking about a handful of years, or in the case of Pokemon Go, which is an app, 19 days. So 50 million users is the population of South Africa, the whole population of South Africa, in 19 days. Basically, the whole population of South Africa running around catching digital monsters on their cell phones in 19 days. So it's quite overwhelming. But interestingly enough, as quick as those adoption rates are growing, so businesses are growing quicker and quicker. And we're starting to see more and more $10 billion market caps appear quicker than sort of ever before. So this is really a chart that shows how many years it took for some of these businesses to reach a $10 billion market cap status. You can see in the likes of Starbucks and Apple, you're talking again a few decades. And then more recently, the likes of Uber and Juul, which is the e-cigarettes business, just a handful of years. So yeah, very, very, very interesting. And obviously, the quicker these businesses grow, the better the returns are for shareholders. So now that we know really kind of why millennials are important, it's important for us to understand kind of who they are, what are their traits, what are their characteristics, and I guess more importantly, for us as investors, how do they spend their money? So this list is by no means comprehensive, but just to kick us off, these are a few interesting traits and characteristics that we feel as investors are important to take heed of. So the first one being ESG, which is environmental sustainability and governance. And basically, millennials care a lot for ESG. They're most concerned about the environment over and above things like inequality, crime, corruption, terrorism, etc. And more importantly, they're willing to pay for the sustainability. So, if they cannot spend money to enact change directly, then they're likely to direct their investing efforts as such to achieve those ends. And we need to be cognizant of that. So regardless of how they go about doing it, the rise of ESG investing is abundantly clear amongst millennials. The other thing that is an interesting trait amongst the millennials is that being healthy matters. And obviously, healthy is a relative term. It is worth defining. Healthy to a baby boomer is not necessarily the same as healthy to a millennial. I think, to some generational cohorts, healthy might just mean not being sick or, not being ill. But the reality is that for most millennials and younger people, it's more than that. Healthy and wellness is really it's a daily active pursuit. They're exercising more, they're eating smarter, they're smoking less than previous generations. And they're using apps to track training data, online information to find the healthiest foods, et cetera, et cetera. So they're spending a lot of time in this area and also a lot of money in this area. And that's why we see the likes of Chipotle Mexican Grill in America doing so well, companies like Beyond Meat scaling rapidly, and more. Interestingly enough, brands matter less amongst millennials. When marketing to millennials, surveys basically show that having a strong brand is not necessarily enough to lock in a sale. You're finding that other factors matter more than just brand name. So they pay very close attention to price. They pay very close attention to quality more so than price. But interestingly enough, when looked at compared to other generations, they definitely are more price sensitive than some of the older and younger generations. So what are the most trusted brands across millennials? Well, this is a list of trusted brands across Gen Zs, millennials, Gen Xs, and boomers. And basically you can see across millennials, you're finding the likes of Google, United Postal Service, Amazon, PayPal, Netflix, amongst the top trusted brands. And if you compare that to baby boomers, you start to realize that actually their focus is very different. Baby boomers trust brands like United Postal Service as well, but also things like tangible brick and mortar stores and more consumer staples like Hershey's and Cheerios, and the weather channel. Yeah. The weather channel. Anyway, so we won't say any more about that, but obviously you can see trusted brands are vastly different between the generations. The most important characteristics that we found across millennials is that they like to spend. They do not save. In fact, they save less than 1/5 of their total available income. Hence why they're known as the YOLO generation, the you only live once generation. They don't really care so much for retirement. So the income that they do have, they spend. And obviously that's important to us because technically speaking, their purchasing power is quite substantial. So we need to pay attention to where it is that it gets allocated. Just a few interesting things that we came across here. You can see that on average, they do tend to spend on takeouts. They don't really like to go to restaurants, etc. They prefer to take out and eat in. They do pay for subscription services. They tend to use Uber and other ride sharing and sharing platforms more than once a week. And their highest expense in their budget is often rent. So those are a few interesting things. We also found that they tend to spend more on clothing than any other generation. On average, you're looking at about $79 per month is what they spend on clothing. So a little bit materialistic in that sense, but you'll see on our next slide, not very, very materialistic. The other things that are important in terms of spend is that we found that they tend to shop online more so than any other generation. They like to spend money on experiences, and we'll get to that in the next slide. But more importantly, they want to pay to access those products and services more than any other generations. And they want access to those products and services sooner rather than later. So as I said, they do spend money. Interestingly enough, they do prefer to spend the money on experiences. If we look at some of the studies, we found some research that came across studies done with millennials asking about luxury goods. For example, handbags. Only 30% of them say that it was really important or a big, not really important or a big priority. Actually, only 10% of them said it was really extremely important. Again, you're looking at cars, similar sort of thing. 30% say they don't even intend on purchasing a car in the near future. Only 15% of them said it's extremely important. So, and we saw this across a range of tangible assets. They really aren't interested in owning hard assets. So they want access to these products and services, but they don't necessarily want to own them. And this is really what's giving rise to what they call the sharing economy. So you're finding that instead of owning products and services and houses and cars, etc., they're really turning to what are otherwise known as a new set of services, providing access to those products but without any ownership. And that is really giving rise to the sharing economy. So, for example, instead of owning a car, millennials will prefer to Uber around and share transport that way. Music, the guys don't want to own a physical CD anymore. They're happy to stream music on Spotify, for example. And likewise with, clothing. I mean, even you're starting to see that guys are interested in sharing secondhand thrift clothing from celebrities and people that they aspire to, etc. So, really that is giving rise to a whole new economy in digital services that we're quite excited about. So those are a few of basically the character traits that we find amongst millennials. Now that we know, why they're important, who they are, what they like, how they spend their money, we need to really try and put this all together for our investment purposes and figure out how to build out a basket of thematic stocks that will take advantage of the growth that we see in these areas, thanks to millennials. And those areas are things like e-commerce. You're seeing the likes of Shopify do incredibly well, Etsy, Wix. These are all online platforms that allow basically millennials and Gen Zs to transact online. The connected world, so things like Garmin, anything that basically allows them to connect to a social platform. So whether it be a phone like Apple or Samsung. Social media, we've spoken about ad nauseum today, so we won't go there, but things like Facebook, Snapchat, Twitter, and there's a host more. We know sustainable living is important to millennials, so we have to have some exposure to that theme, whether it be through Tesla or other renewable energy, etc. We know that they prefer experiences perhaps to physical products, so things like travel and those kinds of things. Fintech. More and more, you're starting to see millennials move away from traditional high street banks. They don't feel that they offer them enough value, so they would rather go to fintech startups like Square or PayPal, etc. Entertainment and gaming. So they spend a lot of time online on playing video games, etc. So we have to have exposure to things like Take-Two or Activision Blizzard, etc. The digital workforce, more and more, kids want to work from home or happy to work on the move. So things like Slack and Zoom are doing really well. And then lastly, as we mentioned, health and wellness. So we'll always have things like, Nike would be a great addition to the portfolio, something like Lululemon Athletica, etc. And really, that's how we go about sort of thinking about which themes are important in the scope of our investing. And we slowly start to build out a portfolio around those. The other thing to bear in mind, perhaps even more important than building out those themes, is realizing the fact that those themes change over time. As millennials go through various stages of their lives, their need for certain products and services will change. And so we need to make sure that exposure in the portfolio changes with it. So, they may start off as, benefiting from the sharing economy and doing an online educational course, etc. Thereafter moving on once they've done some studying to experiences. So they may travel, etc. And then eventually settle down and have kids. And obviously the Internet of Things plays a role throughout this journey. And then as they get older, they move into healthcare. So we really need to make sure that we keep that exposure moving, with respect to where they are in their life stage. So a few interesting fun ways to identify these opportunities. Now, apart from fundamental analysis, which obviously we do go into once we've found these opportunities, and it's not to say that fundamental analysis doesn't work. A little caveat here that our CIO might kill me if I share some of these ideas. I mean, they are very interesting, but the reality is that they're really just a jumping off point to identify certain themes and areas that we believe to have high growth potential, and thereafter we have to do fundamental research into those businesses to see that they are fit for the portfolios. But a few interesting ones, just check how time is spent. We'll go through these now, but look at various platforms, Reddit being a social platform, Robinhood being an investing platform. Follow social celebrities, things like people like Elon Musk and Kathy Woods, etc. Have got incredibly huge followings. And then lastly, there's just no substitute for just using common sense. So if we look at how they spend their time, just very briefly, this is time spent on the internet. Clearly, you can see most time spent on the internet for entertainment purposes is on social media. So as we say, social media is important to have in the portfolio. Then if we look at TV, linear TV and online TV, so things like Netflix and other streaming services like Hulu, etc., would benefit from millennials. Followed by music streaming, so something like Spotify. And then lastly, if you look at online games. So, break it down that way. If we look at social platforms, Reddit is a social platform. For those of you who don't know or haven't heard of Reddit, but basically Reddit is a network of communities where people can share interests and hobbies. So basically there's a community on there for really whatever you're interested in, whether it be, gaming or traveling or crocheting or investing, whatever it is. The point is that, these are communities where millions and millions of users come together to share ideas. And Reddit, as much as some people may not have heard of Reddit, but Reddit has got 430 million users. I mean, that's a quarter of WhatsApp. So it's by no means a small platform. And more, basically, you're finding these platforms as a great source of investing information for hordes of millennials. So to give you an indication, Reddit has a sub-platform or community on it called Wall Street Bets. And basically, Wall Street Bets is where a whole bunch of millennials and Gen Zs come together to discuss investing ideas. By no means necessarily on the back of fundamental research, but really more on social trends. This is a subreddit community on here where this gentleman is talking about bringing oil to the moon with us. He's talking about UWTI, which is an oil future. It says UWTI for life, baby. History tells you all the patterns. It's a big time win. Been researching for 20 hours straight, except for the occasional cigarettes. Obviously, without occasional cigarettes. This is it, boys and girls. Life savings on the line. We've hit the gold mine. I mean, this is the kind of stuff these guys are talking about. And I know a lot of you are sitting out there laughing at this, but the reality of the matter is that these platforms are having a massive impact on what is happening to stock prices around the world. Other things that are important to bear in mind are things like social celebrities. So obviously in the investing circle, we know of people like Warren Buffett, etc. But from a millennial point of view, guys are more focused on social celebrities like Elon Musk and Kathy Woods. A lot of the baby boomers may know Elon Musk for Tesla, but a lot of millennials know Elon Musk for cryptocurrencies and meme stocks. And the reality is that, yes, as much as there may not be as much fundamental research on some of the stocks that these celebrities talk about, their following is huge. And so much so that they're actually able to move share prices. So, I mean, just to give you an idea over here, these are two businesses that were mentioned in tweets by Elon Musk. The one day Elon Musk tweets, Sandstorm is a masterpiece. And the share of this company, jumps up quite substantially, 6-7% on the back of that tweet. Elon Musk was referring to a song in this tweet, a song, not a company, not a listed business, a song. And yet, this business, which has got nothing to do with what he was talking about, obviously had a reaction. And likewise, he tweeted about GameStop and the stock goes up 3 or 4x in the morning. Now, I understand this is not a sustainable way to invest, but the reality is that more and more of these celebrities are having an impact on the way millennials invest. And then lastly, common sense. Again, as I said earlier, no substitute for downright common sense. Just keep it simple. Look at things like receipts. Pull a bank statement today versus a bank statement 10 years ago and see how your spend has changed. Are you spending money on DSTV, or are you spending money on Netflix? Are you going out to restaurants, or are you ordering food from Uber Eats? Simple things like that. Sit down, have a chin wag with the kids, or the grandkids, and ask them, what do you guys enjoy doing? Where do you want to travel? What music do you listen to, etc.? I mean, these things will give you ideas as to, where their attention is and where they're likely to spend money in the future. Think about the future. I mean, you don't need to be a rocket scientist to know that obviously the world is moving towards greener energy and working from home. So, bear these things in mind. And then, when you're thinking about the future, think even further into the future. Don't be shy. Kindle your adventurous spirit. Think about things like space travel. Think about things like autonomous driving. Think about cryogenics. In reality, you'd be surprised at how quickly this kind of change can actually come about. So just to end off on the day, we're going to talk about 2 millennial stock picks. These are obviously shares that we think are important or have potential across mandates where the risk is allowable, and that is SoFi and Tesla. So SoFi Technologies. SoFi Technologies is really an all-in-one financial app. Basically, they're looking to try and aggregate financial services by bringing everything together in one place, on one app, on your phone. And worth remembering that millennials have different financial priorities. One of the strongest characteristics amongst millennials is that they want to be financially free. They want to be financially free. They want to have complete control of their financial well-being, and they don't want to do it through traditional traditional means like Wall Street banks, etc. They want a comprehensive solution on their phone that they can do everything in one go. And that's really where SoFi comes into play. I mean, SoFi offers an all-in-one suite of financial products ranging from investing to loans, to banking, to insurance, to wills, all in one place. And they've seen a massive adoption amongst younger generations. And partly also because they offer a rewards-based platform. Millennials enjoy rewards-based stuff. This company will offer rewards based on referrals, on usage, on credit scores, and a host of other things. And millennials enjoy that, so it resonates with them. Obviously they're able to cross-sell across the platform. They've got multiple different products, and by having access to more clients with more products, they're able to better price risk than perhaps more traditional financial institutions. And in doing so, reduce premiums and pass those savings on to the clients. And also reducing, hopefully, the risk of claims for the likes of SoFi. So, this is an interesting business. Lastly, we would say that the market opportunity for disrupting traditional banking institutions or financial institutions in general is just massive. The market size of assets managed by traditional banks on Wall Street is about $126 trillion. So whether that's, investing or traditional banking or insurance, etc., that is a massive, massive market. So this is one that we think is quite interesting. And then lastly for the day is Tesla. Nothing new to most of us. I think this is probably one of the earliest plays in terms of the electrical vehicle space. It's a great ESG play. We know ESG is important to millennials. Electric vehicles are helping to lower carbon emissions. It's also got a cult following. And I know that's not enough for an investment thesis, but the reality of the matter is, people want to buy what Elon Musk offers. If you look at what, his tweets, he's a celebrity in this regard. And in a way that's helpful for the business because there's no need to advertise. Tesla doesn't spend any money on advertising, unlike the likes of General Motors and other car companies. So that's a benefit. In addition to that, just more fundamentally speaking, you're starting to see the business become increasingly profitable. Margins are expanding. In fact, gross margins on Tesla are almost twice what the average is in the industry at the moment. So it is starting to become a very profitable business, and their battery tech is way ahead of peers. So you're talking about battery tech being 5 or so years ahead of peers, and the battery is the most expensive or the most expensive cost input in electric vehicles. So that's a huge benefit for Tesla. And then cheapest access to capital. So, really at the end of the day, if Elon Musk needed to come to the market and issue paper at, 100 times earnings or something like that, really whatever acquisition he does with that paper or that money is almost straight away earnings accretive, versus other traditional auto manufacturers that are, trading on single digit PEs. So that's a huge advantage. And then lastly, just the potential on autonomous driving, which just hasn't been factored in yet. It may be a few years away. We understand that, but there's definitely blue sky potential in that regard. So those are two stocks that we think are quite interesting. I think in summary, just to end off the day before we bore everybody, I think the millennial cohort is a really, really important generation for us as investors. They are the largest in the world. They're really reaching their prime working and spending years right now. So their impact on the economy is currently huge. And more importantly, they've come of age, during a time of technological change. And that's given them a different set of behaviors and experiences relative to their parents and grandparents. And their adoption rates are significantly higher. And that gives scope for higher returns as shareholders for new services, for new digital services. So I think after today, now that we've had a glimpse into their lives, hopefully we can walk away from this and some of us can, better inform some of our investment decisions across our portfolios. We do hope that you enjoyed today's webinar. If you do have any questions, please feel free to get in touch with us or call your portfolio manager. We are getting ready for the next webinar. We look forward to seeing you there. That webinar will be on the 14th of September at 11:30. So pop it in the diary and we will be sending off invites shortly. But otherwise, thank you very, very much for your time today. We hope you all enjoyed it. I'm going to hand back over to Kate.
Thank you very much, Eric. That was very interesting. I'm sure you've piqued a lot of people's interests. If anyone has any questions, would like to chat to Eric a bit more about these kind of investment opportunities, please either give him a ring or pop him an email. Yeah, and we hope you enjoyed it. We hope to see you all again on the 14th of September. Thanks, everyone. Bye.